Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. These are the names that I have covered in previous videos, and I will do a quick review on each of them. These are the names that have fulfilled up to or more than 70% of their textbook targets. After a quick recap, I will cease coverage on them. Also, I will cease coverage on these names because their chart patterns have been invalidated or did not perform up to expectation. I have put in timestamps, so please use them to skip to the names that interest you. First up, on Apple, the rising wedge that I noted in the video on the 13th of December was completed on the 15th of December. Apple is technically bearish in my view, and the textbook target of this rising wedge is at 253.83. Now, Apple may be undergoing the correction phase of its bearish pattern, and this could lead price action higher to the support trend line around here before entering the bearish resumption phase. I said that Nissin Foods completed a falling wedge in the last video on the 15th of November, in which I turned technically bullish on this name. Nissin has moved higher since, but ended this week down. Now, declines are fine. They are part and parcel of bullish patterns. After completing a bullish pattern, a decline is the correction phase, and in this case, could lead Nissin to around the resistant trend line before entering the bullish resumption phase. I will stay bullish on Nissin, and the textbook target of this falling wedge is at 3,248. On the 8th of November, I said that Hermes was in the correction phase of its cup and handle top, highlighting how it had failed to hold above the Ichimoku cloud. Now, this turned out to be inaccurate because Hermes is actually higher than when I last covered it. Nonetheless, upside strength remains lacking. We can see that price action has thus far failed to hold above the Ichimoku cloud 9 times, starting from here, a trend that I expect to continue. So I will stay bearish on Hermes. The textbook target of this cup and handle top is at 1,239.5. In the last video on the 22nd of November, I highlighted that Alibaba completed a cup and handle top, and the textbook target is at 119.9. I also noted that there was a gap down over here on the 21st of November, which I expected to be filled. Alibaba filled this gap down the following session, and it has since failed to hold above the 20-day simple moving average and closed below the Ichimoku cloud. Further downside is expected, and I'm staying bearish on Alibaba. I noted the completion of a double top on the 15th of November, but Tesla fell to a low of only 382.78, which is around 48.3% of its textbook target at 352.08. Since then, Tesla has rallied and invalidated its bearish pattern on the daily chart. However, seeing how price action has diverged from the upper Bollinger and could fall further, I suspect that the double top could still materialize on the weekly chart as long as Tesla falls immediately and consecutively from here. So I will still be maintaining coverage on Tesla in case this double top materializes on the weekly chart. Moving on to Sing Ringgit. In the video on the 15th of November, I predicted that the next move for Sing Ringgit should be higher first due to overextension below the lower Bollinger. The rebound came a week later but was short-lived. Sing Ringgit has since declined and closed below the support at 3.1560 last week, so it is expected to hit lower still towards 3.1305 next. I continue to stay bearish on Sing Ringgit due to the completion of a head and shoulders top, which has a textbook target at 2.8365. But I've also cautioned again to not expect Sing Ringgit to fall sharply to this target within a short time frame. There are supports currently at 3.1305, 3.0681, 2.9907 as well as 2.94, all of which can bounce Sing Ringgit higher and prevent it from ever reaching 2.8365. I highlighted that dollar Brazilian real may be forming a double bottom in the last video on the 13th of December. This bullish pattern was completed on the 19th of December. I am now technically bullish on dollar real, and the textbook target of this double bottom is at 5.7842. Now, declines are reasonable until it closes below the Ichimoku cloud. Then I will have to reconsider its bullish outlook. I turned technically bearish on dollar CNH in a video on the 6th of December due to the completion of a descending triangle, which has a textbook target at 7.0267. This target was 100% reached on the 23rd of December. I will cease coverage on dollar CNH. Moving on to several names that I will no longer be covering in future videos, starting off with HSBC Hong Kong. I will cease coverage on this name because the rising wedge that I highlighted on the 24th of November was invalidated over here after price action broke above the resistance trend line. I will now cease coverage on sterling dollar. The bearish view that I have on sterling dollar was unsuccessful. The head and shoulders top that I identified on the 20th of September was completed on the 15th of November. But I believe this bearish pattern is no longer valid given that sterling dollar has rallied farther away from the neckline. I also identified a head and shoulders top in another British name, Rolls-Royce, but this head and shoulders top was invalidated after price action rose above 1,127. I will now cease coverage on Rolls-Royce, but I want to caution that if price action falls further from here or rises to around 1196 and declines from there, Rolls-Royce could still qualify as another bearish pattern. I've also made a mistake in dollar stocky and I will now cease coverage on it. I noted that dollar stocky is bullish due to the completion of a falling wedge. This is no longer valid because dollar stocky failed to hold above the Ichimoku cloud twice and has since fallen below the last low. Last but not least, on Aussie yen, the rising wedge that I identified did not see completion but instead was invalidated after price action broke above the resistance trend line. I will now cease coverage on Aussie yen. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like, please subscribe and hit the notification button for more videos like this.